Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Hello, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top business and real estate leaders. Some of our past guests include Chip Gabarino, a local restaurateur entrepreneur, Elliot Nelson, the CEO of the McNelly's Group, and Morgan Martin of Merrill Lynch. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company, and we help our clients buy, renovate, operate real estate assets. We help our clients build their wealth while taking the headache out of property management. That is why no matter what rental you have, single-family homes, condos, townhouses, apartments, we have the management solutions for you. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com for more information. Today on the podcast, we are joined by someone who's truly redefining how people think about money freedom and financial independence. Russ Morgan, co-founder of Wealth Without Wall Street and the Passive Income Mastermind. Known affectionately as the Idea Guy, Ross is a financial visionary who has helped thousands of business owners and investors move beyond trading time for money and into the world of passive income. From building his own financial freedom through infinite banking strategies to leading a movement that challenges the norms of Wall Street, Russ is on a mission to give people back control of their lives, their wealth, and their time. He's a dad, a teacher, a lake day kind of guy, which I am too. And today he's the guest that we're honored to have. Welcome to the show, Russ, and thank you for being here.
Yanni, I enjoyed meeting you prior to record, and I know we're going to have a good conversation.
Love it. Yeah. So, okay, take us back to, the founding story, the mindset shift, the beginning. What led you to create Wealth Without Wall Street? How did you, obtain or get to your own financial freedom and independence, and talk a bit about the journey that inspired the whole movement?
Yeah, no, thank you for giving me the opportunity to do that. I'll try to keep it interesting as it relates to the people at home, right? Like as you're listening to this, why is this important for you? I was an investment advisor, probably somebody that you would have been giving your money to, helping you set up a retirement accounts, if you will. A buddy on the golf course that was giving you, stock tips. That was me. I was a certified financial planner. I thought that I had the market whipped because I started in 2004, and just the way we've experienced up until the last couple of months, the markets had been going up, and I thought I was a financial expert, Yanni. And all of a sudden, this thing called the global financial crisis happened at the end of 2008, and things started going down, down, and down. And I was sitting there, palms up to the sky, trying to figure out what had happened and what was going to prevent it from happening again. And unfortunately, the mentors and advisors that I had, that I looked up to, had been in the industry 20 and 30 years, who had gone through some cycles, had no answers for me. And as someone who really doesn't like accepting, I don't know for an answer, I went and sought different ways that people are trying to build wealth. And what I found is that true wealth was being built outside of the traditional Wall Street model. And that was news to me. And I got introduced to an idea you mentioned in my bio, a concept called infinite banking. I got introduced to an idea called infinite banking through a book called Becoming Your Own Banker. Like a lot of people talk about the purple book, the purple Bible, if you will, with Rich Dad, Poor Dad. Well, this is the black one. And in our industry, it's called Becoming Your Own Banker. And I got to hear the author of this book. He was a 70-something-year-old economist. He was teaching about 400 other advisors like myself at an event down in Orlando, Florida. And he was saying, hey, there's a way to build wealth that has nothing to do with what happens in the stock markets or interest rates on a daily basis. Control beats return. I thought, man, that's really interesting. And at a time of lack of control, it really resonated with me. I didn't understand what he was saying. I had to go and, spend about 6 months trying to basically debunk it and yellow pad it and Excel spreadsheet it for myself. But what he was teaching is that the biggest obstacle for keeping people from becoming financially free was their lack of access to cash. And I resonated with that because all of my cash had been put into equity in businesses, equity in homes, in the markets, especially in retirement accounts that I couldn't touch. And when markets and things started, evaporating these supposed returns I had, it didn't help me pay the day-to-day bills. And I
Mhm.
wanted to figure out what are other options. And he started teaching about that. So that kind of led me on a journey to one, redeveloping the way that I looked at money and getting my cash in a place that I could access it. And then I started trying to figure out, how do I invest? What does that need to be? Because I had always been a markets-based guy. I was tracking standard deviation and alpha. I was not looking at passive income. I wasn't looking at, P&Ls and
Mhm.
trying to figure out, what is the cap rate on a investment property, if you will.
Yeah.
And after a number of years of like doing this the hard way, I understood that there was a couple things that I had to learn. I had to understand what my investor DNA. We can get into that at some point if you want to. What it was, I needed to understand what my investor buy box was, and all of these things just kept stacking on top of each other. To I was getting on a podcast one day just to have a conversation with our local audience, because that's who we were trying to just have a conversation with our clients. And next thing you know, our podcast blew up. People are calling us from all over the country saying, "Hey guys, can you help me do these things you're talking about?"
Mhm. So that conference in Orlando, and I guess like the presenter that you mentioned, who's still around, I'm guessing, or no?
I really wish he was. No, he
Yeah.
he passed away about 4 years ago. He was in his mid 80s. So when I
Yeah.
met him, he was in his mid 70s. And
Yeah.
I did get 10 years with him. I left this part out when I bought his book. He had a book, and I bought it after hearing him on stage, and I read it on the flight home from Orlando to Birmingham, Alabama. That's my hometown. And I
Mhm.
turned the book over, and on the back of the book, it gave a phone number of all things, which is pretty crazy. You don't ever
Wow.
see that
Yeah.
on books, and it gave an address, and the address was Rocky Ridge Road, Birmingham, Alabama. So
Wow.
this man who I was listening to, that I was resonating with so much, lived in my hometown. So I got to spend 10 years with him, and it was an amazing 10 years. Yeah, I wish I still had. Now with ChatGPT, with all the stuff, I do have conversations with him in a very artificial way, but I do get to connect in that way.
Yeah.
Yeah.
That's awesome. So that was the light bulb that was the moment that the light bulb went off in your head. Was it the flight back home when you were reading the book? Was it a certain conversation with him that you were having? Tell me a little
Yeah.
bit about that.
Well, it's a culmination of things, right? Timing is everything, and your ears, right, like are wide open when opportunities happen, and usually it happens in crisis, and that's kind of where I was at with the markets. Not only had I lost 30 to 40% of my wealth, but I also was feeling the burden of the 30 to 40% of all the clients I had's wealth being lost. So that moment gave me an opportunity to be open to new ideas. And
Hmm.
just here's the thing, is that some people are going to be like, I've heard of an idea and I've never taken action on it. Well, I had heard this idea every January for the previous 4 years, by the way. So it wasn't new to me, but
Yeah.
it didn't resonate because I didn't need a new thing. I didn't have anything that was broken. And so I thought my plan was good. So it was one, figuring out the markets were way more fragile than I anticipated. And they're way more fragile today than they were 20 something years ago because of all the government stimulus that's gone into them. And that, triggers lots of booms and bust cycles. But also I learned that I thought, the weight of wealth is just what everybody else was doing. And when I tried to do what everybody else did, I didn't get the same results. And I didn't
Hmm.
understand why that was, right? Like, why can't I just go buy a rental property like Yoni has and get the same results? Well, there's different metrics and things that the way we see the world and the way that we operate will dictate how we'll get results. So I had
Hmm.
to learn that. So there's a culmination of many things along the way that started teaching me about what I needed to be focused on and what I didn't need to focus on.
Hmm. So let's talk a little bit about that. We talk about, you're talking about passive income investment philosophy. I think I read somewhere that your mission is to help people achieve what 200% of their monthly needs in passive income, which is a very specific benchmark. This personally interests me a ton because I'm on a journey right now. I'm 34 years old. I'm on a journey right now to accumulate as much cash as I can because I recognize as well that, cash is ultimately the truest of the truest passive income sources, right? Money spits off money. And there's nothing that's more passive than that. Even your real estate holdings or my real estate holdings are not as passive as, the money that I'm generating off of money, right?
Right.
But my traditional Merrill Lynch, broker or money manager will tell me, We want a moderate, to aggressive, investment plan, something that's like invested in buckets of good, your ETFs, your mutual funds, the things that, we know won't fluctuate too much, with the market. Even though, the last few weeks is probably not true. You look at the S&P 500 and these 24-hour tariff wars or whatnot. There's tons of volatility and fluctuations in the market. Tell us a little bit about how do you help people, achieve 200% of their monthly needs and passive income, and maybe not give away the secret sauce. But I mean, if you can, then go for it. But I'm super curious to know.
No,
How do we accomplish this?
I'll give away all the secrets, right? Like in today's age, information is free. Like there's nothing that is not already out on the internet. So I want to give you as much as I can. Obviously, implementation is where the value's added everything. You have to take action and you have to take the right action, right? Just because you get in a car and start driving doesn't mean you're getting any closer to the destination. You may be going further away from it. So it's definitely implementation corrected. But I want to push in and double click on what you said there, because what we will see and hear from the markets, specifically the stock markets, when I say the markets, that's really what I'm referring to, is that, oh, if we use this mix, we invest in these products, I won't have that much volatility. And all they're doing, they're looking in their rearview mirror and they're looking at the best run our country has ever had and assuming that it's going to continue that way. And that's the same mistake I made from 2004 to 2008, assuming everything that was going on. Just for a history lesson, some people know this, some people don't. Our country, over the last 100 and something years, our stock markets have averaged, our economy has averaged a recession of like 10 to 20% every 4.5 years. The last one was 2008. So do the math. We're 17 years. Prior to that, the longest boom cycle had only been 9 years. So we've been living in this kind of fantasy land. And it's not necessarily because, we've like figured it out. It's just that our country now has just gone into a $2 trillion deficit every single year in order to pump money to the financial markets, propping them up, right? They're giving money to the market and that's buying goods. And we're thinking, that's what's making things go up. Well, as soon as those money presses quit, and right now this administration seems to be hell-bent on saying, hey, we're going to stop some of the previous things, we're seeing this pullback. And that's what's people say it's volatility. No, it's just a reverting to the mean. It's like we're way overspent. So I used to use the analogy, if you put money in a mutual fund, it's like versus, stock is a pane, is just one big glass window, and a mutual fund is having different panes. So if a rock goes through it, you have to replace the whole window, you have to replace one piece. That's just, those are just lines. I just tell you, those are lines. I had a gentleman that was in his late 70s in 2009. He'd been referred to me, and he was meticulous at keeping notes. He wrote down everything that he and I talked about, and he had done the same thing with the previous advisor he had. And on that page, Ronnie, he said he had written stocks, risky, bonds, safe. He shows it to me, and then he pulls out his statement where he was 100% in bonds and it was down 80%.
Ooh.
And he doesn't understand. He's like, this is what he said. I wrote it down.
Scary.
How have I lost 80% of my wealth? So what's happened in the past does not dictate the future. So I would say that when people are thinking about how do I protect my wealth, right? Depends on where you are. Are you in growth stage? Are you in stabilization stage? What's more important, return on your principal or return off your principal, right? Like, so I always try to figure out, like, where am I putting myself in a position? Now, moving forward, what we declare, and this is nothing more than repeating what we've heard from others, Robert Kiyosaki, probably most famously, financial freedom is not when you have $10 million in a 401k, $7 million in Merrill Lynch. It's when your passive income, this money that comes in from things that you don't actively go to work for, is greater than your monthly expenses. That's true financial freedom. I've read the Bible, forwards and backwards, and I've never seen anywhere in the Bible where it talks about retirement. That is a new age concept that we've all tried to adopt in some shape or form. No, my mentor was working all the way until he died in his mid 80s. But he was serving, he was doing what he loved. And so I believe that. So I want to build up enough cash flow that comes in that exceeds my monthly expenses by such a great margin that not only it serves my needs, but it can start serving others' needs. So 200%, very specifically, a couple of reasons behind that. One, I want to think, how do I leave wealth to the next generation, right? Leave wealth to my children's children. Well, in order to do that, I got to start thinking way past my needs. I got to start thinking hundreds of years down the road, as well as if I'm only half right, I'm still financially free, right? Like there's some assets that right now, like we've been publishing our personal passive income report for the last almost 5 years now. You can go to wealthwithoutwallstreet.com. You can scroll down and see our passive income report. We post it every single month. This one that we're recording this month was 52,000 and some change. Well, we've been doing that. Well, some of the assets on there have gone up in cash flow. Some of them have gone down. Some of them have stopped paying altogether, right? You can't always figure those things out. So you have to account for way more, put margin in your life, create that protection so that, where you can go out and do what you want to. And a buddy of mine would call it like his moat around his castle. He said, as long as I got more than what I need, I can go out, do things. I may come back across that drawbridge with arrows in my back, but at least I'm safe when I get back in.
Yeah. I think it was Warren Buffett who said, right, if you don't make money when you sleep, you'll work until the day that you die. And I think it touches a little bit about what you mentioned a moment ago. But let's kind of drive in a little bit further and really dig in a little bit. Tell us a little bit about some common myths people believe about passive income that might hold them back. And then why don't we, after that, talk about your favorite passive income strategies, for someone who's just getting started today. I'm 25, 30, 35 years old. I've got some money in my pocket. Where do I begin? And how much money do I need to begin?
Yeah. So the common myth is that passive means uninvolved. It doesn't mean uninvolved, right? Like you have to inspect what you expect. If you think you can just give money away and it's just going to come back to you, all you've traded is one speculative asset for another, in my opinion. That's the reason we started Wealth Without Wall Street, and we named it that. We were thinking about the mindset of just abdicating the responsibility. It doesn't mean you have to do the job, but you need to understand it, right? Like if I'm going to buy a rental property and hand it over to your team to manage it, I'm going to trust that your team is going to do the job. But if I don't even know what your job is, I don't even know what metrics that I should be tracking that you should be tracking, how can I follow up and look and see if it's working? How can I determine that your company is better than the next one? Right. So I need to know enough about what I'm doing. It's my money. At the end of the day, it's on me, right? It's not on the people I give it to. It's on me. I have to be the best steward. So I think that the myth is that passive means I just am uninvolved and I hand it off. No, you have to be, for it to be passive for you, it has to be active for somebody else. And you probably have to be active on the front end. You have to be active to earn the money, to be able to invest, to create the passive income. But you might also have to be active on the front end to understand how things work. One of the biggest mistakes people make, I've said this before, but I'll go a little deeper in it, is that they believe just because it works for one person, it'll work for another. Here's an example here. And you guys manage a lot of rental properties, single family homes mostly?
Predominantly, yeah.
Yeah. I had a buddy of mine, he had over 100 properties and most of them were single family. He had some mobile home park, some commercial. He's very successful. And I was like, hey, don't reinvent the wheel, right? Just do what he's doing. So I went out, bought a property, got a property manager for it, and thought, life's going to be good. I'm just going to start acquiring these properties. Well, that first property, I didn't like it. Well, why didn't I like it? Because it was, 2 hours from where I lived. I thought, oh, it's in my college town. All my nieces and nephews who are getting close to college, they're going to want to start going down there. That never happened, right? Like all the things I couldn't influence his outcome. And I didn't understand why, but even though I was getting cash flow every month, I wasn't happy. And so I didn't go buy another one. I didn't go buy 99 other ones like he had. Well, so I was kind of saying, oh, single family rental, stupid. Well, it was because it didn't match up with who I was. I could have told you this then, but there's a thing called investor DNA that we all have. It's the way God built us a certain way to see things and to enjoy things differently. And we all do for that specific reasons. Well, there's all these different asset classes and ways that we can invest. And when they match up well with who we are, we find enjoyment, we have success, and we invest lots of money. And what I didn't know that is that individual, he loved the steady and predictability of single family rental properties. And he had just stacked them up. He had no interest in being involved in them. He had no emotional attachment to it. None of that was inside of his investor DNA. For me, I wanted to be involved. I'd like to have some input, and I couldn't. It was not my thing.
Yeah.
And I didn't understand why that is. So I think people say, oh, just because Yanni is having success here, or I'm going to share an idea with you. Oh, just because Russ did that, I should do that. No, you should understand what your investor DNA is. And by the way, if you want to figure out what your investor DNA, we create a whole ebook. You can go to wealthwalkwallstreet.com/same day podcast or same day. And I think you'll have that in the show notes. We have a whole ebook, free information about what investor DNA is and how it works. So whenever you start figuring out what that is for you. So one of the first things I did, I know, I think you guys have talked about this probably a number of times on the show. I was like, I don't like long-term rentals, but this whole short-term rental thing is interesting to me, right? Because I like the influence out of it. And so my business partner and I took a long-term rental, right? We owned the property, turned it into a short-term rental, and started having some success. We hired an operator and we scaled to over 25 units in like less than 18 months. Wow. So for us, we didn't want to run the business. We hired an operator. We like running businesses, buying businesses, building businesses. And then we could influence by telling people, hey, go to wakeupinbirmingham.com, right? Whenever on our websites, on our social media or whatever, we could talk about it. It was something that was exciting to us. And as a result, we allowed an operator to do his thing. We got to have our influence without having to do the day-to-day operations. And we had a lot of success. We grew it to $25,000, $30,000 a month after expenses, income. And then we end up selling the business to our operator. And now we owner finance it to him. He pays us every single month. So that's one of my favorite because I get paid every single month on the 15th of the month. And I don't have any expenses, I have no involvement in it. Probably one of my favorite things I'm doing right now.
Yeah, I bet. Love that story. That's great. Yeah, I mean, owner financing to the operator that was managing your short-term rental portfolio, which is basically like running a hotel. I mean, that it's a different level of involvement. From long-term rentals, which are kind of set it and forget it almost. If you have a property manager, of course. Tell us, I guess, a little bit more about some of your other favorite passive income strategies, and let's talk about people who want to get started. What does that look like? If again 21, 20, 25, 30, 35, how much money do you have to get started? And what does it look like?
Yeah, the other favorite, and this is one that we still have today, and typically we average about $30,000 a month in passive income from it. And it is something we refer to as land flipping. Our partners in the business, they call it land investing. But we buy small parcels of land in the middle of nowhere, not land that you and I would want to go build a house on. And most of them are out in the middle of the desert and in places that, are not really attractive to us to build homes, but people will use them for all sorts of things. We buy them from people who've owned them for years and years and years that basically have never built anything on them. So it's vacant raw land. And then we figure out what the market holds for it. It's something that's so small that real estate agents will not, go sell it, because typically the average property we're buying is somewhere between $5,000 and $10,000. And we're buying it directly from an individual. We're buying it at 25 cents on the dollar of what other people are selling like properties in the area. So we have what Warren Buffett refers to as a 300% margin of safety. And then we turn around and we market those properties on Facebook, Craigslist, and other marketplace to people who will put down a down payment and then pay basically a car payment on it for the next 3 to 10 years, depending on the size of the property. And we have a land contract. And so we just receive recurring monthly income on all of these properties. Every once in a while, some of them doesn't go to full term. Some, for whatever reason, they can't keep making the payments. And, we try our best to help them when we can. We don't have to go through all the eviction process, all the Dodd-Frank Act, all the things that unfortunately we have to deal with other properties. And we can just go back and remarket it and then get a new down payment, start collecting monthly payments. And obviously now our cost basis have gone down significantly from the first one, and we keep doing it. So that's something that we learned going back to 2019, 2020. And we started doing it ourselves. And then we hired an operator who is really excellent at it. And again, we like businesses. So it just gave us an opportunity to partner with them. And it's just been a fantastic thing. It's one of those areas right now. And we like to, there's a lot of people say things are recession resilient, recession resistant. Well, land is land, right? Land only goes up in value, but most people have never figured out how to cash flow it. This is a very unique cash flowing opportunity, the way that we buy and sell it.
Interesting. So it's an owner finance on a piece of land, but wouldn't you say land is quite speculative?
Well, it depends on how you're buying it, right? Like if I were to go into downtown Tulsa and try to buy an infill lot, right? And I would speculate on what's going to happen, right? Will a building come here? Will they, will I be able to get the return on the investment? For us, we are going in and knowing exactly what people are selling exact properties like that for, because we go to only where other land sellers are. So we're not trying to go buy a piece of land and saying, I hope everything moves this way. We're looking for the person who's making $50,000 to $100,000 a year and wants a place to get off the grid and wants to go shoot rattlesnakes, wants to drive their ATV, maybe wants to build a home there in the future. That's who we're looking for. And because of that, we're just gobbling up these pieces of property. And our partners in this business have done almost 10,000 transactions over the last 20 years.
Wow.
Have never lost $1 on any property that they bought. They've always sold the property. Now, the beauty of it is you don't know what it's going to sell. So it's like what we're doing, and we're accumulating properties. It's like a grocery store. You don't know which item the person's going to come in the grocery store and want to buy. But if you don't have it on the shelf, they can't buy it, right? So our job is to buy property in as many attractive places where other land investors are, so we know there's an appetite for it, and we just constantly are selling these properties. And because we're building a note portfolio, it's also something that we could sell if we wanted to, because it's not just the land, it's the cash flow from it.
So, and that's what you referred to as be your own bank.
No,
or not necessarily.
No, be your own bank is a different thing. So you asked the next question, which was, okay, how much money does someone need and how do they do all of this? So there's steps to success, right? And you can't skip steps. Well, we believe that there's steps to becoming financially free. When people see, hey, I spend $10,000 a month, that means in order to be financially free, I need $10,000 a month of passive income. That seems like climbing Mount Everest for someone, right? Like they think, that is the mountaintop. How am I going to get there? Well, you're not going to do it all at once. You got to take steps. So for us, we say you need to get to base camp. What is base camp? Well, you got to organize cash flow. So we build a process called the passive income operating system. Most people just need a better system. They don't have a system, right? So we teach them how to create a system that organizes their cash flow and directs the cash flow that they are normally unnecessarily given away, that they don't have to, and put it into their control, so then they can start investing. So once they set up that, then they learn how to become an investor. So we teach people the next step. Like, you have to be an excellent investor. Most people just have, Robert Kiyosaki said that there's no good or bad investments, just good or bad investors. And for those people who are listening to this show for the very first time and never invested anything outside of maybe the markets, they're like, okay, well, I'm probably a bad investor. I don't know, right? I have to learn. So we teach people how to do that. There's a process of how to become an investor. All these things we were talking about, investor DNA, investor buy box, these, how to do right due diligence, how to be able to, have a conversation with a property manager and ask them certain questions. How do you know if what they're telling you is accurate? How do you back it up, right? Like all those things we teach. Then, and only then are you going to find the investments and start making investments. How much money you need? It's dependent. Like I see people all the time investing with zero money, right? Like there's so many ways to get into investing. You know this, like, I mean, there's people who buy rental properties with little down or 3% down. I mean, like or you could go buy a property subject to, put no money in the deal or get 100% owner finance. There's ways to do everything. And the beauty of it is once you do it and you do it well, other people will start giving you money to do it for them. And so we have lots of, people in our community that have become syndicators, have started becoming capital raisers and capital aggregators because they've learned how to invest personally and people are giving them money. So how much money do you need is very specific to the things that you're investing in. But the first thing you should always invest in is your own financial education. Like you heard that old analogy, if you were going to cut down a tree and had 5 hours to do it, you spend the first 4.5 hours sharpening the axe. Well, in this relationship, your axe is your financial IQ. It's your understanding of how things work. If you get that right, you'll be way more efficient and you'll get to your point way quicker.
Yeah. I think it was, that was like an Albert Einstein original quote that was like revised or changed a little bit. Yeah.
Everything's either Einstein or Abraham Lincoln. I don't know, right? Like, I mean, it depends on who you're listening to.
Love it. Love subject twos. Those are great investment vehicles, especially for someone who doesn't necessarily want to come in with a ton of cash or owner finance, of course. Let's talk a little bit about mindset, behavior. You run a mastermind that focuses on challenging, limits and beliefs or limiting beliefs. What are some common limiting beliefs that around money that you've helped people overcome?
I think there's always just a cap. We hit a ceiling. The reason why someone wants to be in a mastermind is they've hit a ceiling and don't know how to break through it. When I tell people, you're in the right room when your aspirations, what you're trying to shoot for, are the daily accomplishments of the people around you, right? And when you can show up in a mastermind and you can share your idea with someone like Yoni, and he puts his arm around you and says, "That's cute, but let me show you what I see. Based upon my experiences, here's what's really available to you." That's what happens in masterminds, is that you get exposed to opportunities that you don't know. There's a great thing that we put in our book that we wrote, is one of my mentors taught me this. And it's a great little thing. I don't know if you have a pen sitting there in front of you, Yoni, but if you're not driving, do this. Draw a circle on a piece of paper. It doesn't matter how big the circle is. Inside the circle is all of your knowledge. This is all the things that you know. Everything that's touching that line around the outside is all the information that you don't know. Well, what happens as we get into rooms with people who have more insight and knowledge? Well, then we gain that knowledge. So then if you drew a bigger circle around that, now your knowledge has gotten bigger, right? But Yoni, what also happened to the distance of that circle? Did it not grow? So now everything that's touching that line is all the information you don't know. So what we find is that as we gain more information, we learn there's more information that we don't know, and it gets bigger and bigger and bigger. And people need to get that. So one of the biggest mindset shifts people have to have is that I have not arrived in knowledge. I have to always be learning. And when I'm in rooms where people are, and I leave and I go, I learned something, I know I'm in the right room. If I leave and I'm like, there's nothing new there, either A, I was in the wrong room, or B, I was being, I was not listening well.
Yeah. Interesting. Being humbly confident in what you don't know is very important, and having a growth mindset is that, I think number one driver of my success, right? I mean, I didn't do subject twos until I interviewed Chris Prefontaine on this podcast. And he sent me his course, and it was a game and 2 books. And the course and the 2 books were just like life changers and eye openers. And I came from the world of finance, so I had the financial acumen and the understanding, and it was easy for me to wrap my head around, subject twos or more complex vehicles like subject twos with owner carrybacks, and so on and so forth. And until I didn't really get into the nitty gritty of it and get into the stuff that I didn't really know, I didn't do it. And I was afraid of it too, because it was a foreign concept for me. Then I started understanding it, and it just became, now it's second nature, and I can explain it to people, like they're in fifth grade and go through a transaction. So I love it. I want to be conscious of your time because I know Big Boss has assigned you a task today to take your daughter to school here pretty soon. So just lastly, for someone that's listening who's stuck in the 9 to 5 grind, the rat race, and doesn't know where to start, what's the one thing that they should do today to change their financial future?
Yeah, I think without a goal, we never know if we're obtaining it, right? We talked about that at the very beginning. You can get in the car and start driving, but if you don't know what the destination is, so one of the things I would say, the simplest, is sit down and create a goal. Like, what are you trying to accomplish, and why is it so important? We listen to podcasts, we have certain friend groups, and sometimes we adopt other people's goals because we think they sound good.
Mhm.
I would say, what is your goal? And why is that so important to you? And is it big enough to force you to do things that maybe you're uncomfortable with to make sure you attain it? And I think that people don't spend enough time on that. Like, if you came in our community, we have a free community. It's in the App Store, What Wall Street. The first thing we tell people to do, we take this passport challenge. It's a total free course, but it's all about building out a goal, a whole process. And how do we do that? Because we think that if you know exactly what you're trying to accomplish and why it's so important, you won't stop. You will work as hard as you possibly can to obtain that specific thing. I hear people say, "Oh, I want to, grow my company and sell it for $50 million." Great, but why? Why is that important to you? Right? Like,
Mhm.
what is that going to do for you? How's that going to change your life? What is life going to look like at that point? Did you need $50 billion? Was your goal to get more time? Okay, how are you tracking time? Right? So oftentimes we track things, but we don't track time. How are we tracking our time?
Mhm.
What is the thing that we want? Because not just because what I want for me and what you want for you doesn't mean it for the person listening, it's going to be the exact same thing. And I think that's the key that people need to have is you need to know what's your goal and why you want it. And then you can measure how close you are to there, right? Like I figured out that I needed more time, and passive income was going to give me more time. It was going to give me freedom, meaning I didn't feel like I had to sit in front of this computer screen from, X time to X time because I knew I had passive income. I wanted to, I could, but I also know that I can get up in just a second, drive my daughter to her homeschool co-op and not worry what's happening. I'm going to, take off for a month this summer because I know I can. So I needed to track cash flow, passive income greater than monthly expenses. I needed to back into that number as a percentage. How close was I? But for somebody else, maybe that's not their thing. They need to just understand what their goal is so then they can figure out how close they are to it.
Yeah, love it. Okay, well, Russ Morgan, thank you so much for being here and educating us. To all of our listeners, go to or visit go.wealthwithoutwallstreet.com/same day. We'll have that link in the comments below. You have a couple of free resources there. You can take the quiz that he mentioned. Reach out to Russ and his team if you have any questions. And Russ, I think you and I should stay in touch and see how I also obtain that, total financial freedom and take back my time. That's really the truth. Is like I think everyone wants that more than anything, right? To take back their time.
Totally. Well, thank you so much for having me on the show.
Likewise, thanks for being here. See you next time.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.